This week is not only about seed rounds, it's about scale, ambition, and the continuous global talent war. Lucidya raises $30 million after 10 years in the game. What finally clicked? Are we seeing the birth of an Arabic AI stack, and who's leading that? Morocco's Aura wants to be the country's everything app. Payment, logistics, food, commerce, chat, all in one. Can they do that if they focus only on one country? And why is the North African part of MENA quieter than the GCC, Levant, and Egypt? Yasmina just became MENA's most loved and talked about startup. Why? What is embedded insurance, and why is it suddenly attracting VC capital? On the global news, Windsurf's OpenAI deal collapses, the CEO jumps to Google, and the rest of the team goes to Cognition. On the other hand, Meta acquihires the full team of Clay AI. Where is the global talent war going? And should founders play that game or avoid the news as a distraction? And finally, we keep seeing that same pattern. A founder starts here in MENA as an employee, then suddenly they go global with their deep tech startup ideas, raised from US VCs, and get acquired by giants like Meta. Why do we keep losing those breakout founders? And can we spot top pre-founders before they even launch? Let's get into it. Hi everyone, and welcome to a new episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, VCs, and investment rounds. Let's jump into it with our amazing guests for today. Arjun Chopra, VC at Khwarizmi Ventures, Asya Kabel, Investment Manager at Arzan VC, Firas Atwa, Senior Associate at Algebra Ventures, Mohamad Khawaja, Founding Partner at Fikr Ventures, and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites.
We are delighted to welcome our new presenting sponsor, MilkStraw AI. Great founders build world-changing companies, and they do it by being relentlessly efficient. They obsess over every dollar spent, and the smartest investors back the ones who make every resource count to drive the biggest outcomes. That's why so many founders use MilkStraw AI. It finds hidden savings in your AWS bills, sometimes up to 75%, freeing up capital for growth, hiring, or simply building faster. See how much you could save in 60 seconds and how much further your runway can go at MilkStraw.ai.
This episode is brought to you by Okta, the AI-powered finance automation platform built for modern businesses. Managing receivables is not one task. It's dozens of repetitive ones. Correcting invoice details, updating PO numbers, following up on payment status. It's operationally critical, but painfully manual.
Okta changes that. It helps you automate your financial operations, starting with accounts receivable, so you can focus on what you're actually good at, growing your business. From contract to cash, Okta's AI agents handle everything: invoice creation, reminders, dispute resolution, payment tracking, reconciliation, even financing. You don't need to learn how to use Okta. Okta learns how you work. It adapts to your SOPs and existing workflows to get the job done. Finance teams at Cream, Lean Technologies, and Outgram rely on Okta to reduce admin time, speed up collections, and unlock cash flow.
If you've heard of them before, you know that they used to say 100 companies use Okta. The number is now 500. They are moving fast. And that kind of growth only happens because the problem is real and the solution actually works. Automate the finance work that slows you down. See how at weareokta.com. Our weekly news is brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Hi, Jamie. A lot to cover today, from local news to North African news and global news. What do you want to start with?
Yeah, let's start with Lucidya then. I think that's the most logical place to start. 30 million round, which they're claiming to be the largest sort of AI-focused funding round to date in the MENA region for a startup. In terms of Lucidya itself, as you mentioned in the intro, Ahmad, it's been around for quite some time. So it's been around for the bones of 10 years. Interesting, we see Impact 46 lead the round. Seems like anything they touch of late seems to turn to gold to a certain extent in terms of what we saw with Arzan of late. They've had 2 IPOs go live on the Tadwal, and I'm sure they're trying to pursue a similar path here. In terms of the other investors as well, we have some sort of quasi-state backing via, Wide Ventures, which Aramco's deep tech arm, Takatkah Ventures as well. We Spark Labs joining Rua Growth Fund, who previously led the Series A as well. Interestingly, Lucidya began life as a sort of like Arabic language social media sentiment analysis tool, kind of delivered on a SaaS model, and since then it sort of maneuvered its way into what it currently is today. And I suppose the USP, or the biggest thing that seems to have changed, is obviously the AI side of things, and it seems like they're really doubling down on this sort of AI agent approach across a sort of a wide subset of different verticals, be it telecom, healthcare, hospitality, public services, etc. It's exciting.
Yeah, so after 10 years, as you said, it's a long time. And this is a $30 million round. It feels like a turning point, right? What finally clicked? The tech, the market, or just investors' appetite for B2B AI? What are investors really betting on? What do you think?
If I look at such deals, I mean, I feel excited how impacts 46 to enforce it with WAD to scale like the R&B muscle of the region. I think like that's some sort of a validation from a VC perspective. You can see also the customer experience and using AI for a customer experience in a commercial way, not like saying I'm launching a new LLM and that's it, but putting it in a commercial context. And banking, telecom, many other aspects in retail is definitely what Saudi Arabia and the region needs as well. So I think we have interesting consumer side that is commercially ready and already like focused on serving customers instead of being just an infrastructure company. And also the mix between global and local VCs is a great angle to appreciate and maybe support in future opportunities like this.
You want to come back to the product later on, because I need to talk about Maqsam and Labiba and all the other maybe kind of competitors. But let's take other opinions. What do you think? What clicked? Why now?
I really think it's the timing. I used to be one of the people that was very, I think, dismissive at the beginning of, what people used to call LLM wrappers. And that's basically, application layers or application startups that are built on top of LLMs. And I think initially, because I didn't have a lot of, understanding of the AI space and so on, I felt like this was primarily, a quick win where startups can use LLMs and kind of make a lot of profit kind of at the short term. But then a lot of these LLMs are going to expand into these application layers and kind of dominate, right? But in reality, that's not the case, right? And a lot of these, I guess, LLM wrappers or AI wrappers are not fluff anymore, right? These are real world application layers with true customer value, right? And I feel like the timing of, Lucidya, and at the same time, just the timing from a geographical perspective, right? You don't see a lot of these world-class AI startups really, really expanding into the region. And that's a great opportunity for startups to come out of the region and kind of at least build, a first mover advantage, right? So I feel like the timing is great because there's a lot of interest in terms of just AI startups in general. But then just from a first mover advantage, Lucidya has that kind of, I guess, initial customer stickiness, right? Because they've been operating for kind of almost 10 years now. And then kind of adding that AI layer to it kind of creates that competitive advantage for the next few years. So that's a great opportunity.
Makes sense. Asya, what do you think?
Yeah, so I just want to add on Firas' point, like it's not only him being dismissive about that field, the AI and LLM field. Like recently I was reading one of the reports, and I'm a big fan of their monthly reports where they talk about the trends and everything. And in their June and May reports, I think they mentioned that there's a gap in investing towards AI in the MENA region. We're not coping with the global trend. It's not that much, like we're not investing heavily in AI. And they were questioning the reason behind this. So when I read the news about Lucidya, like this was exciting for me, but I kept wondering why, like for the last 10 years, we didn't hear much news about them. Or maybe we were dismissing these news on purpose. But the same reason that Firas mentioned, like we weren't educated and we didn't know the details of LLM. We were just not fully educated, and we're missing the talent even between our VCs team to describe and tell us truly if this is needed or not, if this is like defensible or not. So the absence of the tech between, like the talent between the VCs teams, it's what's causing that we're missing on these AI investments. And another reason, which I personally believe why like now until now we're passing on AI, but we're not investing heavily like in the region, I think it's the valuation. So if you remember, if we go back to 4 years ago when we had the fintech boom, we thought it's going to be a bubble. Like we used to talk to pre-seed stage, seed stage with no traction, no revenue, tech is not fully built, and they were asking for 10 million, 15 million valuations. And what's shocking is Saudi investors and mainly angel investors were supporting these valuations and accepting, and they had the dry powder. So for us, like not only us, many VCs avoided the fintech, thinking that it's going to be a bubble and it will explode. However, by time this didn't happen. What happened is either the valuation corrected itself or the valuation get justified, but by other factors. So the investor get learned, okay, you shouldn't depend mainly on numbers, mainly for fintech. You should depend on the tech, on the team, on the idea itself, rather than justifying it by like the median and like what's happening in the market. And I think this is what's going to happen with AI. I'm really curious to know what is Lucidya evaluation and if like the impact that it accept.
I wish they announced the news. They didn't. Yeah.
Like we need more data to really start accepting what is the correct valuation or not. And I think this is what's going to happen with AI. Either the valuation going to be corrected or it's going to be justified by other factors rather than the numbers and taking like EBITDA multiple, net revenues multiples. So I think these are the main reasons we're passing on AI or we're not investing heavily. It's like mainly the absence of tech and the high valuation.
Okay. Arjun, what do you think?
I think a small point to add first, like the point on the highest AI funding round in the region, there was one more round raised by Applied AI, which was quite interesting. So what happened was the founders started in London, but they relocated to Abu Dhabi. And they raised a $55 million round led by Bessemer, which is also Bessemer's first investment in the region, which is a great sign. So I think, like more importantly than which one you want to call technically their largest round is seeing the fact that there are large AI rounds happening in the region, which I think is a good sign and hopefully a sign of more things to come for AI companies being built out of here. I think on the point on Lucidya, like why I also see it as a great timing now is the accelerated appetite of adoption by customers. So what's happening right now is a lot of the enterprises in the GCC, they have mandates to roll out tenders and potentially adopt these kind of AI solutions. So obviously Lucidya has an edge compared to the global competitors. By the way, this space is very crowded globally. There are quite a few incumbents with the likes of Medallia, Qualtrics. But I think what's happening right now is they have bigger fish to fry outside GCC. They're focusing on players internationally. There are quite a few enterprises in the GCC who are willing to pay hundreds of thousands of dollars for a solution like this. Lucidya has an edge when it comes to Arabic, but it also has an edge when it comes to compliance and hosting. So obviously, all of you know there's local hosting requirements when it comes to Saudi. So I think what's going to happen is Lucidya is well positioned to acquire some of these enterprises regionally. And once it gets into these enterprises, there's quite a bit of room to land and expand and hopefully even increase the contract values.
It's a highly competitive market, even locally. And the good thing about Lucidya, for me, the big news for them is they actually reinvented themselves over the past 10 years because they started very early and then AI came in. They really reinvented themselves with the new products that they're offering. But let me go back to the product side of it. So Lucidya focuses on analyzing Arabic sentiment. Labiba is building an Arabic LLM for chat. Maqsam is deploying real-time Arabic voice bots. They are all focusing on the customer experience, right? I don't know if they complement each other or if they are competing with each other. And are they kind of building an Arabic first AI stack for the region? And who do you think can win this war?
I think Lucidya is Saudi Arabia's response to G42, for example, because I see like a lot of even bigger rounds and bigger initiatives as well around AI. But what I like about Lucidya is like they are commercially driven and they focus on very solid verticals. So they're not like a gigantic Arabic AI company that wants to basically just be an infrastructure player for others, because I believe it's too early to set one infrastructure player for the whole region. Globally, like we don't have a single player who do like a single language or dominated like Latin languages or whatever. So For Arabic as well, it's too early to have one infrastructure LLM that is for all. I think we need to have a competition because more than one infrastructure player would play the role. So I think Lucidia's commercial perspective makes it very ready to harvest quickly from the Saudi market instead of like putting this big numbers and market trends and like those are estimations of the potential, but not really harvesting the now moment in the market.
Adding on Mohammed's point, so I think the Lucidia benefits, again, like as I mentioned previously, when we used to look at fintech, for example, at Arzan VC, we said, okay, we're not going to be investing in any fintech player. We're going to bet on the ones who are building the infrastructure of the market. And this is the benefit of Lucidia. Now, investor will bet on these unique players, AI players, who will build the infrastructure. So this is the main, I think, edge of Lucidia. But again, like you just mentioned, there are many players trying to build this. So is it easy to replicate this infrastructure? And what's going to be the exit scenarios? Like, this is really concerning. And again, like, since we're still at the beginning of that trend, we're really concerned about the exit options. Like, I remember even in the marketplace, everyone was excited about marketplace, but we discovered there is no exit out of it. So the valuation crashed down for many marketplace players. So for me personally, what, again, like, concerning me about AI, should we really bet like on them being an infrastructure, or how easily this can be replicated, and what are the exit scenarios?
Look, I think it's definitely not a war yet, because I feel like we're still kind of very early stage in terms of this part of the world, in terms of our adoption of AI and also kind of the building of the ecosystem, right? So if anyone's benefiting, it's definitely the region, because the more startups there are, obviously the bar gets higher every time, and then there's an opportunity to truly innovate, right? And I think what's important is that AI data in Arabic is super scarce, right? So as long as there are people trying to, whether it's kind of an LLM or a application layer that uses Arabic, it's definitely an opportunity to, first of all, kind of generate that content and generate that data kind of in kind of our language and kind of the type of language that we speak, whether it's kind of, colloquial Arabic or kind of actual Arabic and so on. But also it's an opportunity for them to kind of create a competitive advantage that allows them to kind of look appealing for startups looking to expand into the region, right? So the more you're building, I guess, defensibility around your kind of access to data in Arabic, for example, the more you're kind of an exciting or an interesting opportunity for acquisition, right? And there's also a lot more startups building in that space, right? There's DX1, which is a portfolio company at Algebra. There's Intelia. There's a couple of other companies that are kind of building AI application layers kind of in Arabic. It's definitely an exciting space, but it's definitely not war yet, I guess, from my perspective.
Yeah, I have to say I'm very biased. So we invested in Maksam. So I see that as hopefully they'll be one of the winners. But yeah, I think I agree.
Right, Arjun, so do you think Maksam and Lucidya are competing?
Not I wouldn't say it's head to head right now. So I agree with what Firas mentioned. It's not a war yet. I think, can they expand into overlapping products? Yes. I think what they're building as an infrastructure does lead logically to them having sort of overlapping and competing products. At the same time, I also think there are enough use cases out there where these players can find their niches and specialize. Having the existing distribution with enterprises, they can figure out what they want to do, whether it's focusing on certain verticals, like maybe highly regulated ones, and carving out a niche there. It can be focusing on certain kind of products like voice, customer support, for instance. So I think there are enough use cases for multiple of these players to exist. But there's also definitely a world like where both of them are focusing on customer experience as a whole. And I do see a world where they eventually end up having overlapping products. On the point on exits, I think we'll get to it later on the news about Meta and Google, but like it's clear what's happening around the globe. And I think the market for AI exits, at least globally, is very hot right now, with sort of very, very high multiples and prices being paid for talent. Whether that will happen regionally remains to be seen. But I do think what's like with the macro push that's happening with the government, with increasing focus on AI with on the large companies and also from the consumer side, which means there will be appetite when these AI companies go to IPO from the public markets. Personally, I'm still optimistic when I look at the exit potential of AI companies down the line.
Aren't we all? Yeah, it's all exciting times, especially for AI companies. Let's move from Saudi to Morocco now. What's happening in that journey?
Yeah, I think I'm open to be corrected. I think it's the first time we've focused on Morocco-based startup in the entire life.
Yeah, we covered news from North Africa, but not Morocco.
Yeah, which is interesting in and of itself. So we get the collision of that with super apps, which we have discussed rather extensively, especially I think over the last couple of weeks. And interestingly, so this particular company, Aura Technologies, they've secured a 7.5 million Series A, and from the outset, from inception, which is only since January 2023, they have been determined to be a super app. So sometimes these things evolve organically and you focus on one specific vertical, and just invariably over time you sort of layer in, complementary services, and they improve the data flywheel, etc. Whereas Aura from the very beginning have been bundling the P2P transfers and the digital wallet and e-commerce, on-demand services. They've got social networking and chat functionality, and then food delivery as well, which I think is an interesting approach. Some metrics, we don't have a ton of data in terms of how each of these are performing, but I know that the food delivery app, they've 15,000 plus active users. It took them about 10 months to get to that point. And on the digital wallet, about 50,000 onboarded users in 5 months. Now, I don't know what the story is as far as how active they are or anything like that, but that's the best that we have to go on. And in terms of this new funding, it's going to be used to scale the last mile infrastructure for retail delivery. And then the idea is also to drive that mobile wallet adoption. I do know that it's e-commerce or commerce, especially in Morocco context, is still very, very cash heavy.
And to chase the dream of the super app as well, right? As they mentioned.
The dream of the super app.
Today, they're focusing on two big beasts: digital payment and last mile delivery, food delivery. Isn't that enough? I mean, for a company at Series A, that's two big challenges early. And now they want to do e-commerce, social networking, chat, mobile wallet. What's your reaction to that in general? And why not go deep in one of these verticals? Why keep chasing that super app dream? Everyone is doing that. But on the other hand, maybe because they're focusing on only one country, they will be able to do a super app that covers everything. What do you think?
Basically, when I read the news, I have been reading many news about like these super apps and the investments in super apps. I was curious to know more about these super apps and maybe talk to a few players. However, too bad I don't know us as an investor. And even recently I'm reading again the news from one of the reports. We're seeing like Morocco and Tunisia, they are one of the top funded countries in terms of funding value or number of deals. Even with me reading these news and reading the news about the super app, we passed. Like I feel the FOMO and why we did this. I feel too bad for saying this, but I believe we started to get and sit in our comfort zone. We're just used to our region. We wanna we know the Egyptian market. We have the presence there. We know how to tackle the challenge there. And for the GCC, we have the high penetration, high spending power, high internet and smartphone penetration, and high spending power. So we believe in these main markets, and this forced us to avoid such opportunities, to avoid looking at Asia.
There are bigger markets as well, like Algeria, Morocco, big countries with high populations.
Speaking about myself, I feel like we're in our comfort zone. We're avoiding these markets. And like, if you ask me what is the spending power, internet penetration, everything, I don't know the details. And VCs, they are not hiring full-time employees there or remote employees. Again, at least like from the VCs that I know. So I think we're really missing on like great opportunities there. And I remember before 2 or 3 years when we were attending She Wins, I met many female founders from Tunisia and Morocco, and I was really impressed by the quality of the founders. They are super smart. They know what they are doing. And by the way, the valuation is not that high because they don't have dry powder as much as the GCC has. Normally, when you're in a market where you have challenges, like you can find problems and you will challenge yourself to find problems for the country. So when I read the news, I felt the FOMO. And again, I was like, I need to give the chance to Morocco. I should.
طيب, Arjun and Firas, you're in Egypt. You're closer to that market.
I have a multi-pronged view, I guess, on this in a way, because we're one of the investors that are actually very bullish on Morocco, and we're very active in the Moroccan ecosystem. And like as you said, it's the fifth largest in terms of the number of rounds across the continent. I'm talking about Africa, and the sixth largest in terms of funding amount, right? And right behind the big four, right, which are Egypt, Nigeria, South Africa, and Kenya. So it's definitely a very exciting market. Like as you said, top quality founders, a very strong and stable macro environment, a young and nascent ecosystem that's kind of looking for access to capital and access to talent and so on. And also a very strong linkage to both Francophone Africa and also Europe in some situations, right? So it's a very exciting market in that sense. We're one of the funds, and I'm talking about Algebra here, obviously. We're one of the funds that are very, very bullish on Morocco, right? We already made 2 investments. One is a deep tech startup kind of building an AI fetal ultrasound diagnosis application and hardware called the Deep Echo. And another one is a supply chain disintermediation play in the agricultural sector called Yola Fresh. And we're talking to a lot of founders in Morocco and so on. So definitely on the Morocco side, I'm very excited and I'm very bullish.
And what do you think of Aura and what they're trying to do?
So that's the other side of the approach, right? I think it's very exciting that the team at Aura is looking to build the super app from scratch. But I think my personal opinion is that that's very difficult, right? In the sense that, like Jamie said, super apps typically begin with a single core service, right? And you see that, across different geographies, across different markets, and also across different services, right? Kareem started as a ride-hailing app. WeChat in China started as a chatting app. GoJet started as a food delivery service, right? Grab started as a ride-hailing app. So you see a lot of these very successful players at this point in time, right? Starting off with a single service, right? And when I say starting off, that means, 3, 4, 5 years of them just operating within that specific service or within that specific product, gaining a lot of customer stickiness, and then offering, adjacent services where they can, upsell or cross-sell and so on. So it's difficult to kind of start off with a super app as you kind of decide to launch your startup, because it's difficult to offer that level of customer experience and kind of product quality and so on across so many different verticals. I support the team and I vouch for them and I hope they can I really, really want them to succeed, but I think it's very difficult to kind of implement that.
Yeah.
In
Especially that they started with 2 separate apps, one for peer-to-peer payment and the other one for food delivery. And then now, I don't know, are they going to, they say they want to have one interface for everything. So are they going to merge those 2 apps? Are they one or what exactly? I don't know. Arjun, what do you think?
Yeah, I think on the point of Morocco, we are interested in the market as well. We made one investment there. You mentioned some interesting data. So in 24, like Firas mentioned, it was, I think, top 5 in Africa, close to 100 million raised. On your point, Asya, like what we saw was the internet penetration was relatively high. It's more than 80%. At the same time, what you mentioned, Jamie, like it's still 70+% cash. So I think like given these 2 data points, it's quite interesting, and like they make for a good case that financial, like the cashless transaction will increase over the coming period of time, which is why we also invested in fintech. So what our company does is called Shari, it's also enabling financial services, but for businesses, not end consumers. And there's also more macro drivers happening with the Central Bank of Morocco. They recently released license opportunities, so startups can now get licensed. And they were one of the first to get licensed, and now they also offer this license to other companies wanting to expand. So I think from a market fintech perspective, I'm quite positive on the country. On the super app, I think I would love to see how they're doing it with this amount of capital. I think one of the challenges that still exists with Morocco is the lack of growth stage capital. Unless you expand outside Morocco to GCC or to some Western markets, there's still relatively few investors who want to invest in growth stages in North Africa. I think the exception is Yasser, who's also doing a super app. But the founder had great connections in Silicon Valley and he went to Y Combinator. So I think that sort of solved some of the access issue that these startups have. And the second challenge I still see are the exits. So there have been relatively few exits in these markets, which is again like making VCs a bit hesitant to invest. So yeah, I think the SuperApp model requires quite a hefty chunk of capital, and you do need a lot of this to scale. So I would be honestly, I don't know much about this company, so I don't want to comment on how they're thinking of doing this. But I'd be very curious to understand like how they plan to scale all of these different products at the same time, while foreseeing this capital shortfall potentially that might happen in future growth rounds.
Ahmad, what do you think? Is Morocco a big enough market for them to be a super app in, or are they going to expand? And what do you think in general?
There are many interesting insights about this deal, but like I want to jump into the period between the last two rounds, like it's just 4 months. So that has a message of its own. It's either like this round or the previous round was maybe financing something, let's say logistics part of the app, and the latest round is more into payment and like the mobile wallet thing, and that's why, because there should be justification about this decision of doing these consecutive rounds in that very short period of time, like 4 months, if I'm not mistaken. So it's very tight in terms of time frame. That means they are. This is the speed versus sustainability discussion. Is it like too quick to do it in Morocco? I don't know the Moroccan market, I have to be honest, but like looking at North Africa and maybe Africa at large as well, different demographics, and I mean the potential of mobile payment, mobile wallets is huge because a lot of cash is there, as my peers highlighted. So definitely, I guess they're doing it quickly because maybe they're afraid of international competition coming in, and maybe like just owning the market as a, so the first mover advantage to be run by a Moroccan startup and maybe funded by local VCs is a great move, I think, for our economy. So even though it's a very bold move and we need to be also lean in execution as we do it, definitely, I guess if we wait for, I don't know, WhatsApp, WeChat, or maybe global players to come to certain parts of Africa and do it, I believe we will lose our edge on our own market. So this is a smart move in Morocco, but it requires also deliberate support from VCs to maybe bring in global VCs in their upcoming rounds, because local VCs can't support growth stage. There's not enough, I mean, growth stage funds in Morocco to maybe support such opportunities. So global expertise and global VCs can maybe play a good role, but for a local Moroccan startup.
I don't think the concern is that it's a single geography, right? When you think about all the different super apps that have succeeded kind of globally, they kind of all mostly operate in one market, right? And because you're a super app, kind of by nature, you're operating across so many different verticals. So there's a lot of opportunity for, growth within each specific vertical, right? So I think our main question is not whether a single geography is going to work, because in theory it does work, and it worked in other smaller markets than Morocco. I think the question is, how can you execute on a lot of these different, I guess, products or services simultaneously with a limited access to capital and limited kind of customer stickiness and so on, right? So I think that's the main question, right?
Yeah. Okay, so for all the VCs and Morocco, Tunisia, Algeria, Libya, we would love to host you here to tell us, more insights about the market and Al Maghreb, and tell us more about the great startups and founders that you're backing in North Africa. Last week we had an Algerian VC who lives in Dubai, and we would love to host more people from North Africa. We always go back to Saudi, Jamie. What's happening in Saudi with Yasmina and embedded insurance?
Yeah, not embedded finance. Well,
Yeah,
I
it's
guess
always
it kind of
embedded
fits-
finance. Like it's the first time embedded
Yeah.
insurance. Okay.
It sits at the intersection though, so I guess it's on one level. Yeah, so Yasmina, they've raised a $2 million seed round. I'm a big fan of Masood as well, so a massive congrats to him. Delighted. Actually interviewed him about this about a month and a half ago, so that'll be coming out tomorrow as well.
I was supposed to meet him last night, but something happened and we couldn't. But he's
Yeah, no way.
now.
Is he at the moment? Okay, that's fine. Yeah, he's absolutely lovely. So it couldn't be more delighted for him. In terms of the round itself, so Colette, Machine Holding, and Access Bridge Ventures, participation from Arzan. So I'll defer on a lot of this to our representative from Arzan, who's able to tell us far more than I ever could and give us the inside scoop. Look, for a brief bit, I suppose, about what Yasmina does. So basically, it's the one API insurance. So plugs cover, be it like SME, medical, life, motor, general, directly into HR, auto, real estate, travel, POS apps at the checkout. They claim it's 48-hour partner onboarding under Saudi Central Bank approval, 1.5 million users already reachable through signed partner deals. In terms of the founder background, I know Masood previously worked as a product director at Expedia. And I guess one of the kind of global proxies for Yasmina on one level is Lemonade, maybe in a US context, or Cover Genius, I think, who are Australian based. I suppose maybe the global leader as far as embedded insurance is concerned. And then his co-founder Bashar is ex-Saudi Central Bank, and I think helped establish a lot of the sort of insurance regulations in a kingdom context. It actually initially started as B2B home insurance product, as far as I know, before sort of pivoting to the B2B to C embedded insurance route. Look, I'll defer, and you'll get the inside scoop there.
Asiya, maybe before we talk about why you'd invested, but can you explain what is embedded insurance? How does it work? Like, walk us through.
Before the explanation, I'm telling you again, no negative effect.
Okay.
So basically, what does Yasmina, as you said, it's embedded insurance. It enables online businesses to offer insurance to their clients at checkout. With one click, they can get the insurance, and they make sure that you're in one specific industry, you're getting the best insurance from the best provider at the best price. So it's not a
Like
price.
what? Can you give us examples?
So basically, for Ciara, Ciara, one of their biggest clients as of today. So for Ciara, when you buy an insurance for them, or when they buy an insurance, they need to cover these insurance from like regulatory perspective until they sell it, and from like the clients themselves, they are required to buy insurance. Previously, what's used to happen, the traditional way of getting an insurance, looking at separate players, or even there are many marketplaces for insurance provider, and these were not connected. So what Yasmina did, easily, when you buy any car from Ciara, when you rent it or anything, you easily, with one click, you insure your car. The payments goes immediately to the insurance company with only one click. You don't have the hassle of going around and getting like several offers or anything. And again, it's not a price competition. So their price may not be the cheapest price, but they study the industry itself and the KSA market itself very well. And they ensure that they are dealing with the best insurance provider in that industry. And that player, they ensure that it's giving you the lowest price. So again,
what other verticals are they covering?
So now they are working on the health insurance, life insurance, but their main focus was like the cars insurance, but they are offering now the health insurance. So for example, they signed with Jisr to start providing health insurance for the employees. So again, for the HR not to go to several insurance players, now when like using Jisr, they can insure their employees immediately. And what's really attractive about Yasmina, that they are working on the e-agent license, and it's going to be the first license given to such players in Saudi. This license going to enable them to collect the premium on behalf of the insurance company. So rather than directing you to the gateways of the insurance players, the consumers immediately going to pay in one like website, and then Yasmina will be dealing with these payments and premiums, which is again saving the hassle and the headache on the customer side. But getting back how we get to know about Yasmina, I don't know if you guys read the news about the 500 Sanabel patch, the flat 6 lab patch and everything. So for me, I was reading the news about 500 Sanabel, and I saw the news about that patch, which included Yasmina. And I think I met all the founders. And I was really impressed. Like, I felt like, okay, this is like really good. The quality of the founders, the quality of the startups, and everything is really amazing. Like the whole batch, literally. Even the flat 6 labs, I was amazed by the founder. But what really make me get like to dig deeper in these markets and the Saudi startups back again, like us as Arzan VC, we stopped being active for a little bit, mainly in Saudi because of the high valuations and the dry powder and everything. But again, I noticed that batch, they have a justified valuation. The founder's attitude previously, or maybe for the last year in Saudi, was like, this is what I have, take it or leave it. They have the dry powder. They won't even discuss things with you. That attitude was really annoying for me. But during the past period, I noticed, no, the attitude changed. The founder justified the evaluation. even if it is on the high side, they justify it. They know what do they want. They don't have the attitude of take it or leave it. No, they will discuss with you everything. They will answer every question you may have, and they will like either convince you or they will be convinced themselves. So that's what really attracted me. And with Yasmina team, the founder themselves were super smart. They know what they are asking for. Discussing the terms was not easy, and it wasn't like a one like discussion and that's it. No, they were strict. They know what do they want. That's what we like about them. And the valuation was really justified. Like we didn't even discuss the valuation. They justified it. We accepted it, but we discussed other terms. They really know what do they want. They are not just throwing things on the table. And again, for like we had several concerns about competition. Is this unique? But for me personally, I think at the pre-seed stage and seed stage, what really matters is the team. And I was impressed by the team. Masoud, as Jamie said, he has the startups experience. He has the product development experience for like I think more than 13 years. And for Bashar, he was the director of insurance inspection at SAM for 16 years. And he was literally involved in drafting the policy and building the insurance ecosystem in Riyadh.
Like an example of a founder market fit. Perfect.
Exactly.
Yeah.
So like imagine like Bashar, he is connected literally to everyone. He has the network. He knows the in and out of the market. So he can really add value. They will face many challenges, especially competition. But our bet that we believe that they can tackle these challenges and their first mover advantage will be the main like advantage for them.
Okay, who wants to challenge Asia or Arzan VC? Let's see how defensible is Yasmina's model. Is it the tech, the insurance licenses, the partner integrations, and the connections the founders have? What do you think?
I think we're threatened to say anything. So yeah. No, look, honestly, I'm gonna. I guess I'm gonna think about it from a different perspective because we don't really invest in Saudi. So what was very exciting about the news is that they were considering expanding into Egypt, right? And I think what's very exciting about this for me is obviously I'm Egyptian and that kind of comes closer to me. And one of the kind of the things that I kind of know about Egypt is it's an extremely underpenetrated market, both Egypt and Saudi, and also kind of the MENA region in general, right? It's a significantly underpenetrated market when it comes to insurance, right? I think in Egypt it was like less than 1%, in Saudi it's like less than 2% of insurance penetration, right? So there's a massive opportunity for micro insurance players, embedded insurance players to really kind of make a difference in kind of in that industry. And I think the embedded insurance part is very exciting because a lot of the challenges and issues that people face with insurance is, the bureaucratic nature, the manual processes, the lack of transparency on pricing, and the lack of trust of like insurance institutions and so on. So really kind of embedding that into an automotive marketplace or maybe like a health tech app and so on, really, I guess, eliminates a lot of these factors that push people away from kind of, I guess, using insurance, right? So it kind of reduces the customer acquisition cost, it improves the customer experience significantly. So that's really a great opportunity to tackle the problems, I guess, face on, right? And that's what's exciting, I think, for me. And I'm rooting for them to kind of expand into Egypt as well. So.
Yeah, I don't have anything to challenge, but just a few questions as you evaluated this, Asia. I think I agree on the point on the penetration. So I think to your point on 1 to 2%, we're looking at like up to 18% in Western markets just to benchmark that. So there's a long way for this region to go. I think some of the questions that I had were what premiums are they actually looking at? So with embedded insurance, like the average premium is I guess like slightly lower ticket size compared to just selling traditional insurance if you're an insurer yourself. So how do the economics work and how much scale do you need to become a massive company? That's one of the things that came up to me as a question. And then on your point on the competition, I think there's also the likes of Tawania who are trying to do this themselves directly. So I guess the question was like these big insurance players are creating their own digital brands. So you saw this happen with fintech as well. So when you had the digital banks come in to this region, like the traditional banks launched their own digital banks like D360 or Rio, which was quite tough for any startup to compete with given the massive amounts of cash they have. So I'm just questioning like if that's going to happen in this space as well, where the traditional insurers are going to spend like tens of millions of dollars launching their own digital brands, and how are these startups going to compete with that?
And then maybe do integrations with all of these big marketplaces and compete.
They already have the distribution and they already have the brand. So that's the couple of questions that come up to me. But otherwise, I agree with the thesis. I think, like, given the long way we have to go in the penetration, the team looks very solid as well. So hopefully it'll be a good one for you.
It's great that you have mentioned Taawuniya. And what's really interesting, like that Yasmina and Taawuniya now, they are signing some kind of partnership. So Taawuniya is more of a B2C. Yasmina is more of B2B. So they are, like, I think that they signed, or they at the final stage of signing, where they will launch their insurance programs to MENA, iTech, and Jisr. So rather than Taawuniya competing directly with Yasmina, and Yasmina was part of their program, Plug and Play program. So I don't think like Taawuniya would be competing with them, since like they have this good relationship. Rather than competing, they are building that partnership, which would be a benefit and win-win situation for both. And when we like question, like again, like traditional players will be building their APIs, why they should depend on Yasmina? We discovered that the building APIs, it will take almost 12 months to build these APIs and to do these simple integrations. And when we spoke to different insurance players, and since like from our parent company Arzan Group, we have that connection with many insurance players, they always tell us we will prefer to remove the headache of building the integration and dealing with the online businesses, but dealing with one player who will avoid us this headache and will be doing this for us in exchange for a percentage, for example, rather than hiring the tech and everything. So like these questions were were raised, however, they were answered and we were justified by like in the partnership and everything that I mentioned.
Amazing. طيب Mohamad, wrap it up for us.
In very simple words, I like Masoud. I've got the chance to work closely with him as a board member in the previous startup. He's a really like a shrewd entrepreneur, and I see that he's doing great job as you mentioned here. I like something about the product itself, which is like the speed. Like they have this commitment or promise of 48 hours onboarding. That's a message that this product is basically strong enough and basically can definitely compete with the big insurance players, because everyone is worried how the big insurance players can they crush an IT enabler transformer like Yasmina, or basically work underneath. So this is a big question. I think there's a lot of indicators that Yasmina is smart enough to maybe embrace them and work with other big players like Taawuni and others. So this is a great sign. So I'm excited to see more of insurtech players in Saudi Arabia, because the market is huge, as everyone feels that.
And Mohamad, you and I go back with Masoud to the N2V days, because I remember at N2V we invested in his company. He was a co-founder in iArabi, right?
Yes, iArabi. He was ahead of its time.
Exactly. He was, yeah. Jamie, take us from there to the global news on the talent war. What's happening now?
Yeah, the talent war seems to be gathering steam with each passing week. It's difficult to keep track of all these acquihires on one level. It's really emerged as this, I think that'll be the tech term of 2025 will be acquihire on one level. So we've OpenAI and Windsurf. We all thought that was going to go through. It seemed to be taking some time though, and I think as each week sort of passed, it became less and less likely on one level. So that was a rumored 3 billion acquisition. So the bid sort of deadline expired, and they wasted literally no time whatsoever. Google very, very quickly swoops in and paid roughly about 2.4 billion for a sort of non-exclusive license to Windsurf's tech. So they take away the CEO, Varun Mohan, co-founder, Douglas Chen, and key researchers as well, leaving the 250 person staff at Windsurf sitting there wondering what on earth is going to happen next. And look, thankfully, a couple of days later, news emerges then that they've struck a deal and they're going to be acquired by Cognition AI, and it's going to be acquired on employee-friendly terms that sort of waive, the vesting cliffs, and everyone is included in the payout. But this is all setting a really strange precedent, I think, in with these companies in terms of the senior leadership. And obviously we saw a similar thing with Scale AI and Meta as well. And obviously the question becomes then on one level in terms of existing partners or clients of these particular companies. It's so hard to have any degree of trust in what remains and what's going to happen to those particular companies then as well. And look, the second story then, Play AI as well. So Meta continues its, I'd love to know the amount of capital which they've actually spent to date on all of these acquisitions. I haven't seen that total figure yet, but I mean, it's absolutely enormous. And we have a MENA angle here as well, in that Play AI, the company they've acquired, led by an Egyptian founder, Mahmoud and Hamad Sayed, the ex-Dubizzle engineers of all things. So this was founded in 2020. Their flagship product is a multi-turn kind of speech model. In terms of the funding history, I think the most recent was a $21 million seed led by 500 Global and Kindred Ventures. But I think they're a YC company as well, as far as I know.
Yeah.
I think Y Combinator is involved in some respect.
YC invested in the deal, I think, from the fund of YC, but I'm not sure if they went to a YC cohort. I'm not sure. But yeah, when Play AI, when they started to create AI voices for games, but then they expanded to enterprise, and then now they're acquired by Meta.
يعني أنا صراحة I read the news very quickly, correct me if I get this right. Was this an acquisition of the founders only, and the founder themselves became so selfish and left their own company?
You know, that's a good question, because when Surf was announced, the acquisition was announced, there was a deal and it fell through. So what? I mean, the company should continue. Why do they have to dismantle the company and the CEO goes to a second company and the team goes to a third company? I don't know.
That was really shocking for me, because if the founder himself, the one who built the company, left the company, what picture and image you're gonna leave to your company? Normally, we bet on founders because they believe on their startups. But if they left the startups, like, you're harming the startup. So for me, that was like, sorry to say this, but it was selfish. Like, you left your own company for what? And like the employees, how, like, you broke that connection with the employees. And another question that got to my mind, legally, how can he do this? Like, there is no legal binding contract for him to stay on the company. Like, احنا بالعربي بنقولها, like, and for investors, رجلي على رجلك. If you're gonna leave, I'm gonna leave. I need to exit first. But did he leave the employees and the investors and everything, and he moved to another company? There is no legal cases against him. Is this fine to be done? And are we witnessing a new kind of, like, acquisition where you acquire founders and leave the startups? This is so risky if it's going to be happening. And I think if we saw more cases of this, we should really, like, have a legal agreement with the founder. رجلي على رجلك. You won't leave before I leave. خلاص.
So yeah, a good point. Those talent wars, offering the team or the talent $25 and $30 million packages a year, or $100 million package over a few years, will eventually affect the term sheets, and it might introduce new terms in the term sheets for investors. Ahmad, what do you think?
And I have an interesting angle as well, which is investing in Arab diaspora, like in the valley. You've been living there, and maybe many others also go there very frequently. I think the challenge is, if we bet on like an Arab entrepreneur in the valley, would we face such a challenge of, if they struggle, they would take a hefty package and leave to an international player? I think this is a very fundamental question on their passion, so I think there is that type of maybe stress testing those founders. If you're in the valley now, I mean, and you get this acquisition offer, would you leave for a selfish move, as you highlighted, or would you stick to your company and fight till the end for the much bigger reward? And I guess this is the challenge. I would love to see more of Arab diaspora in the US who launch global companies and stay until the end, until the really rewarding exit happens. And that, I believe, will keep VCs from the region excited to do that. And by the way, we're soon announcing such a deal. I'll keep it until we finalize. That is an Arab diaspora, an Egyptian guy who's basically based in the valley, but really doing something very exciting in his domain. And definitely, we see this as a great sign of our VCs in the region can also capitalize on this talent, because they would always bring into the region a lot. Their next future rounds would be also easier. Their global expansion would be huge. A lot of benefits, but also challenges, as we can see.
What you mentioned, Muhammad, suggests this question. Should founders think about this talent war and the potential acquihires while they're building? Should they optimize or just build to show off their technical talent with a strategic acquihire in mind from day one? I don't know. What do you think, Arjun?
There were a lot of interesting points raised, and what's also super interesting is how these deals are being structured. So if you see Google's acquisition, they paid 2.4 billion, sure, for the founders, but they also paid it to non-exclusively license the technology. I think that probably answers some of our questions on whether investors got an exit. I think this means that investors certainly got an exit. Otherwise, they would have been very busy suing Google right now. At the same time, like what Meta did was they acquired 49%, I believe, of Scale AI for 14 billion. And I think it's very intentional. Like they're acquiring like less than 50% for the antitrust laws to not get triggered, but they're acquiring enough to make the investors and early employees excited to exit and leave and make sure everyone stays happy. So like it's very, very interesting how all of these deals are being structured. On the point on these talent wars, I think it's fascinating, to be honest. Like it's from these big companies, I can also see it from their perspective. So they're thinking, okay, like AI technology, it will add like a few trillion to our market cap in the next 10 years. That's the expectation they have. Do I want to pay like a few billion for this talent, which is very rare? Like the supply of this talent is very, very rare. Should I pay a few billion in the next couple of years, which is the time for these AI solutions to pick up and the winners to be framed? Like if I look at the long term and trillions in value potentially being created, it makes sense for me to pay this crazy amount. So I can also see it from the perspective of the big companies who are happily lashing out this capital. But I guess the risk is like the consolidation of talent that all of you mentioned. Like it's going into the hands of a very few select companies. And it's going to be very interesting from a regulation, from like a long-term consumer perspective on how all of this plays out.
Yeah, Firas?
Yeah, no, look, I agree with everything that was said, and I agree with what Arjun is saying in the sense that when you look at it from, the big tech companies' perspective, this is all to create competitive advantage, right? When you think about the different layers within AI, the infrastructure layer, a lot of the, the GPUs that are being built are becoming cheaper and faster to build and so on, right? And then when you look at the LLMs, there's a number of LLMs. A lot of these application layers are now kind of multi-mode or multi-language, I guess, applications. So they use different LLMs at the same time, and they have like LLM aggregators and so on. So in some sense, LLMs are also becoming commoditized, right? And everyone has access to all of these different LLM softwares, right? Or LLM, the large language models, right? So talent is really, or humans are really becoming kind of the most valuable commodity, right? And I guess that kind of is showing, or kind of is presenting itself in reality as we see it right now, right? Because it's just an opportunity for these big tech companies to create differentiation, right? And the only way to create differentiation at this point in time is just to hire the most talented people, right? And the most talented people are the ones that build the most valuable startups. So you see that with Scale, you see that with what's happening with Windsurf, and I think we're gonna see it a couple or a few more times in the next few months as well, right? So it's exciting.
Yeah. It is exciting indeed. Before we wrap up, a big thanks to Okta and MilkStraw for sponsoring today's episode.
If you want to get paid faster, access financing, and automate your receivable process, head to weareokta.com. That is weareokta.com, and take control of your account receivable today. And if your AWS bills are getting you down, check out MilkStraw. They can help you find hidden savings of up to 75%, freeing up capital for growth, hiring, or simply building faster. See how much you'll save in 60 seconds at milkstraw.ai.
With that, thank you so much, Asia, Arjun, Firas, Mohamad, for joining us today. And thank you, Jamie, for bringing us all these news.